hands up if you like the idea of retiring early. Well, I certainly do, but what does that mean to you? To me, it means working because I want to rather than because I have to. It means that I'll have as much time as I want to spend with family or friends or to pursue my passions like playing music. My name's Cairo, and in this video, I'm going to go over how to retire early with dividend stocks. Now, I'm not selling any courses or anything. All I ask is that if you find this video helpful or interesting, hit that like button. That would be a huge help to me and this growing channel. Now, quick disclaimer, I am not a financial advisor, so it is best to do your own research before making any financial decision. What are dividend stocks? If you haven't seen it yet, I made a video going over some of the basic terms that are helpful to understand when you're getting into investing. So I'll link that up in the cards and in the description. You can go check it out after you've watched this one. A dividend is a payment made by a company to its shareholders as a reward for them having invested in that company. Companies incentivize the public to buy shares by promising to give them a percentage of the profits that the company made. The other main incentive for someone to buy shares in a company is that they think that the value of the company is going to go up, and with that, the price of the stock. Now, not all companies pay out dividends. That is totally up to the company. It's totally their choice. Instead of paying out dividends, they might decide to reinvest those profits back into their own company. Many tech companies like Facebook, like Tesla, like Amazon, they don't pay out dividends because they are reinvesting those profits back into their own growth. So shares in these companies are known as growth stocks. Then you get companies like Coca-Cola. They're already huge companies, so there might not be as much room for them to grow. So they might choose to, instead of reinvesting their profits into their growth, they might decide to pay some out to shareholders. And as the TikTok meme goes, try saying Coca-Cola without your lips touching.
Coca-Cola, 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 Coca-Cola.
Companies like Apple, they do both. They are both growth stocks and they're dividend stocks because they do pay out a percentage of their profits as dividends to shareholders. Now, Apple didn't always pay dividends. For a long time, it was just focused on grow. But now it is such an established company that they have started to offer dividend payments. So Apple is paying out a lower dividend because they're still investing in their own growth. And these types of companies or these types of shares are known as dividend growth stocks. Well, now we know what dividends are, but how do you actually retire early from dividend stocks? Figuring out how much dividend income you actually need to retire is not that difficult. First, you have to figure out how much you want to live off. Now, if you plan on being a baller, living off your dividends, living the high life, you're gonna need a lot more invested in order to live off those dividends than if you were frugal and cooking from home, not going to too many crazy restaurants. So there's a big difference in the type of investment you need depending on the type of lifestyle that you want. It also depends if you plan to live solely off of your dividend income or if you might have other sources of income, for example, real estate. And if you want to know about real estate investing, I'll pop a video that you can check out after this. I'll pop it in the cards and in the description as well.
Assumption time.
So I'm gonna make up some numbers here, but I promise not to make an ass of you and me. Let's assume that number one, you'd be happy living off of $30,000 a year, and that's not including any pension or social security. And two, that upon early retirement, you are gonna be getting a dividend yield of an average 4%. So what is a dividend yield? Well, that is measured as a percentage by taking the dividend that you get and dividing it by the share price. Now, Johnson & Johnson's current dividend yield is 2.46%, Coca-Cola is 3.29%, and dividend crushing kingpin AT&T is 7.23%. So to figure out how much total you need to have invested in order to make $30,000 a year from dividend income, we're going to be taking the annual income that you want to be getting from dividends. So in this example, it's $30,000. We're going to divide it by the average dividend yield of 4%. So when doing that, you just go divided by 0.04, and ta-da, that says you need a total investment of $750,000 in order to be able to get $30,000 a year from dividend income. That's $750,000. That sounds crazy. That sounds like climbing Mount Everest. But actually, let's look closer into the numbers. Maybe it's not as scary as it sounds. Let's take a look at a few different scenarios of how we can get to that $750,000. Now, the total US stock market has average returns of 9.2% Over the last 10 years, and the S&P 500, so that's the 500 biggest companies in the United States, is doing even better at 13.6%. So for this example, let's err on the side of caution and take a rate of return of 8%. Let's say that you can afford to put in $500 a month. Even on a low income, with some savvy budgeting and perhaps a little bit of rent hacking or house hacking, I'll pop a video explaining all of that in the cards as well as in the description. You should be able to put aside $500 every month. So investing $500 every month, how long would it take you to get to that $750,000 mark? Drum roll. 31 years. Now keep in mind that the full retirement age in the US is at age 67 pretty much. So in this example, let's say you started at 20 and you were putting in $500 every month, you were getting an 8% rate of return. You would hit that dividend investment goal of $750,000 when you're 51 years old. And that is 16 years younger than the full rate of retirement in the US. I think that's a win. Now, unfortunately, nobody told me this when I was in my 20s, otherwise I would have been chucking money into investments for the last decade. So what if you're like me and you're only starting this a bit later on in life? Well, there are only a few factors that affect the compounding growth calculation. Number one, that's when you start and how long you let compounding work in your favor. Number two is how much you contribute. And number three is the rate of return. So to get to $750,000 as a total investment, we would either need a better rate of return or we would need to contribute more, or both. So what would happen if you put in $1,000 a month instead of $500? How long would it take to get to $750,000? Well, let's fiddle around with some numbers in this compound growth calculator that you can find on investor.gov. You can actually just Google compound growth calculator. There's a whole bunch of ones out there on the internet, and you'll see if you're putting in $1,000 a month and you're getting an 8% rate of return, it will take you less than 24 years to get to that $750,000 investment level. If you could squeeze together $2,000 a month, it would take you less than 17 years to get to $750K. And what you can really tell from this graph is that time is your best friend when it comes to compound interest. The bottom curve is if you're getting a 7% rate of return, the middle one an 8% rate of return, and the top one a 9% rate of return. And you can see that if you leave that money in there for 30 years, there's quite a big difference between the 7% and the 9%. By big difference, I mean a cool $500,000. Now, you could pick your own stocks, or you could buy index funds or ETFs of dividend yielding stocks through a broker like M1 Finance or Webull. I'll pop links to both of those in the description, and if you did sign up and fund your account on Webull, they're giving you 2 free stocks, so free money, whoop! One of my next videos will be about how to go about picking a stock or picking an ETF, so make sure you club the sub button. Also, turn that bell notification on to make sure you find out when I release new videos. If this video was helpful or interesting, please crush that like button. 1, that would be a huge help to me in growing this channel. And 2, it might help more people see it, because don't you wish you knew this stuff decades ago? You can watch these videos next. I'll see you in there. Let's hustle together.